Hi everyone. Now I'm going to do some scalping on the Dow index, Wall Street, and because I'm scalping, it's going to be quick trades. I'm going to be in and out, and my exits are going to be based on logic at the time, and also ensuring that I've got at least 1 times my risk as a reward. Scalping quick in and out, that doesn't mean that you've got to trade on every single candle. That just doesn't happen. But during the open of a market, and I'm going to be trading the open, probably right at the open, to 10 minutes after, or 20 minutes after. I'll probably trade for 10 or 15 minutes in total, but I'll be at the charts for maybe half an hour or an hour, because you can't take a trade on every candlestick, because some of them are not set up correctly in the right place with the right confluence to them. So even though I'm scalping and only taking bits of candlesticks as profit, I have to have always a situation where I know my risk and it's at a sensible position. Now, with my risk, I judge that by my entry has to be close to either a support level for a long trade or a resistance level for a short trade. And I also look for, and I use the EMAs, as you probably know, for that in the river of value. And the candlestick itself that I take the trade on also has points of support and resistance. So the open of a candlestick provides, if let's say you're looking to go long, I'll look for a trade or a candlestick to go red first of all and then green, and the open of that candlestick will provide me with support for my trade. So 2 levels of support or resistance for each trade. That could be the open and the low of a candlestick, the open and a high of the candlestick, or the open and an EMA, or 2 EMAs. Depends where things are lined up. But I'm always looking for 2 points, because that's security for my trade. It makes trading sense. So I'm looking for good probability, and I get that through only taking setups that I'm familiar with, and I'm looking for a good reward to risk always in my trades. The probability, sometimes you can get 9-10 to 1 reward to risk, but the probability always has to be good, and that's what's important. So it's demoralizing taking losing trades. It's even more demoralizing having more winning trades than losing trades, and getting letting the losers run. My levels for exit on a stop are definite. They're set when I press enter for the trade. When I buy or I sell, I have definitive levels, and I always exit when I get to the stop level, and you should do too. So the stops are not, I don't have them set at outset via my trading system. I have them set in my mind because I'm disciplined. And if you're less disciplined, then you'll need to, or if you're taking longer term trades than the ones I'm taking, then you'll need to set your stops at outset and have physical stops in place. Okay, this stuff isn't easy. But when you have a system and you can operate that system and you have discipline in your trading, then that's a winning combination along with the right formula. And that's what I'm going to hope to demonstrate to you this afternoon. So we're going to go to the charts in a minute. I'm going to be trading Wall Street or the Dow as a Dow Jones index, and I'll be trading the 1 minute chart, and I'll have the 5 and the 1 minute charts in front of me. So let's have a look at the charts. Here we go. All right, just under 1 minute to go, and this is the current state of play. So market's in a bit of a trading range at the moment on the 5 minute chart, and you can see it's in a trading range on the 1 minute chart, which is what you'd expect. So big run down followed by trading range, normally followed by big run down, but we shall see. Anyway, not thinking about tomorrow, not thinking about 10 minutes time, I'm thinking about now, and at the moment the market's going up, so let's wait and see what happens. 5 seconds. Okay, so the market as it stands at the moment is way up above the EMAs on the 5 minute chart and way up above it on the 1 minute chart as well. So any trade that you take long here or short is too far away from the EMAs. Wouldn't go short from, you know, when the market is trading, price is trading above the river of value. I wouldn't go short anyway. I'd trade short from below the river of value, because it's important to have the river of value as either support for long trades or resistance for short trades. So this is the area of the chart that I'm going to be focusing on here and here, the right hand edge of the chart. This is what I'm going to be focusing on. So we've got a bit of continuation here at the open. Yeah, this is prior to the open, first bar, second bar, and if I'd have gone long, I'd have had winners, but the reward to risk to reward ratio would not have been good, because in this sort of situation it's very difficult to know where to place your protective stop. And you know, this one went red, went green, and then went up, but the probability of that happening, you know, on the basis of, you know, 1,000 occasions like this, the probability of this happening is not particularly good, and therefore probably 8 times out of 10 I'd have had a losing trade right here if I'd have gone long. Okay, so let's have a look here. So on the 5 minute chart, big green bar followed by another big green bar, and price is just going up. As it stands at the moment, it's 200 points, the market, down on where it closed yesterday. So might make all of those points back if it went back up here. That would cover it. Chances are though now we'll probably have some sort of pullback. Hoping so, because then I might get an opportunity to go long. So a pullback from up here can take two forms really. It can either come right back down quickly with some red bars, or you might get mixed green and red bars basically tailing off down here or going straight across. Either way, eventually it'll be the stage where the price is equal to where the river of value is, and when that's the case, there may be a good chance to go long. So what I'm looking for here is for this red bar to continue extending down a little bit, and then I'd be looking to go long from just above the EMA. Now that's not quite far enough down. Thinking about the chances of going long on the next candlestick, but I don't like this. Price is right up here and the EMAs are down here, and I like them to be close by because there is a risk that price just comes straight back down. Okay, that's looking pretty good on this particular screen, so need a bit of red. No red on that bar at all. Anyway, never mind. I have to just sit it out and wait because I'm only interested in perfect trading opportunities. And if you can set your mind to only be interested in perfect trading opportunities too, then that'll be a really good asset for you. Right, it's coming down here and it's looking pretty good. We're on 34 seconds into the minute. Still showing signs it's going to go up, so wait for the next candlestick. You can see this is beginning to look like a traverse going steadily along, and as long as it doesn't turn into a trading range, that could be along as soon as that bar goes green. Not quite. Not quite. Right, waiting for the next bar now. Waiting for the next bar. We'll see what happens. Right, if this bar goes green. Nope. Nope, no good now. Too late. Right, this here now provides a stop level for a trade long, if that's what I'm going to take in a second. Okay, well, I'm looking for the price to close above the 8 EMA. Anywhere there would be good. And then I can place my stop below here. Yeah, it closed right on the 8 EMA, which is not perfect. So I need this candlestick to go red first, really, and then go green, and it hasn't. No. So I'm sitting, waiting. No. Bit of red. Right. Yeah. Nice. Okay, that was a perfect opportunity, but I didn't take it. Something didn't feel quite right. And that's because it opened below the 8 EMA, but this one's going to close above the 8 EMA. So that's all good. Tails, when you get a candlestick like this one here, tails that big provide super trading opportunities because basically your stop goes below the tail, the entry would be here, and you've got a massive winner. Tails that are long like this are too long because your entry will be here, you stop there, so your risk would be all of that. So it's got to be the right mix, and it's got to be at the right level, and there has to be the right confluence with it as well. This is all looking good for a bounce now from the 20, from the river of value. So that's a good long. Ah, look at that entry. Oh no. Right, I'm getting out. That was a terrible entry. Dear oh dear. I clicked at the right time, but markets will be markets, and everybody saw it at the same time, and my broker delayed and got me in too late. So I lost money on that one, but it was a good trade, and I should have made money on it, all things being equal. Anyway, might get another opportunity in a second. Right, looking for it to open there, that's perfect. Looking for it to open above the 8 EMA. Which will provide support, and hopefully now we can have some of that money back. There we go, that's good for me. There we go, quick trade, a few quid. And I got out because it had reached the top of this tail here, which could have meant rejection back down, but if I'd have stayed in, that would have been very nice, and I'd have earned 3 times as much as I did from the trade. That was a perfect entry. Notice within here now what happened was the EMA, the 8 EMA, looks as though it was well above where I entered, but it wasn't at the time, it was down here. Due to the size of the green candlestick, it dragged the value level up. So all good there, all good. We're in the money. Not much, but we're in the money for the day. And on the 5, this spike down here was a good bounce. No entry, but a good bounce. Look for the entry on the shorter time frame, and there wasn't one down here, but there was up here, and that's all good. Right, that there would provide a no too big a tail now. This here was a perfect size of tail. And look at that risk and reward in that candlestick. Should have trusted it, but I didn't. Because the reason I didn't is because it wasn't a perfect setup with all of my rules being above the 8 EMA here. Here might well have been a good bounce trade, however that pushed up far too quickly for any trade to take place. Now could go through both EMAs, through the river of value to the other side. Not necessarily going to, but it could do, and therefore there's no bounce trade. Just looking at the 5-minute chart, there is a fairly good bounce trade on that, so let's just have a look. All good on the 30-minute chart, so let's have a look. see whether we get a decent entry here. Right here. So what we got? Where's it going to close? Where's it going to close? Have to wait for it. When I'm trading, I'm waiting and watching. So I'm not actually doing anything. I'm not trading as such. I'm just waiting and watching. And when I see a perfect entry, I'll go for it. At the moment, I'm waiting, watching and talking, which makes it very interesting. Right, here we go. Are we ready? There. Too late. No. There we go. There we go. Perfect entry, but the market's moving so fast still after the open that the money that I had, several £100 up on the trade I was, disappeared between me clicking and actually, or me talking about clicking and exiting, and me actually getting out of the trade. So I managed to lose another £12. Not the end of the world, but it all adds up. And anyway, we move on to the next one, and I'm looking to go long now because the market closed on the last bar just above the 8 EMA, had a tail on it which was above the 20 EMA, and this one opened with a bit of red and turned green, and now we're on to a new bar, and I'm hoping it's gonna go up, but that was a good entry, and I'm looking to take profits at least 1-to-1 reward to risk, the risk now being the bottom of the bar, which we're close to in price now. It's just hovering and hopefully gonna go up from there. Yep, that's it, gone green again now. So that was close to an exit for a loss, but the loss would have been quite small, and now we're looking good for a win again now. And good to go on that one. Another good trade, another good one, several £100, and looking very trading rangey. You know, 3 consecutive bars on the 5-minute chart have got tiny bodies and are dojis, and you've got trading range activity on here, tight trading range, so not great trading conditions right now. Anyway, made a bit of money, so I'm all good. Well, I really hope that you found that useful, and you know, it takes a lot of practice to take trades, to trade consistently and with discipline on the lower time frame charts. It takes a lot of discipline, and you'll notice there that I was sitting and waiting, you know, for a long time in between trades. A long time in terms of, you know, in terms of what exactly? Not really a long time, was it? Because how long did the video last? 15 minutes, something like that, and 4 trades. So, you know, there is waiting in there, and you can't take a trade on every candlestick because the risk and the reward and the probability are not right on every candlestick. You need to spend time studying, basically, because studying is the only way that you'll set your mind and set your brain so that it recognizes trading opportunities when they exist that have good probability, good risk and good reward combinations. And you'll only do that through practice and through learning. So learn setups and then practice on the demo, and be very successful before you risk any money, and get a proper education, because education is vital in life, isn't it? You don't find sports people at the highest level now who don't have coaches. And I'm a trading coach, I'm an expert, and so do get in touch if you'd like any help with your trading. But the most important thing for me from this video is that you learn the fundamentals and that you see trading in action, you see it happening. Notice the trades that I took, the 4 trades that I took, I had 2 losers and 2 winners, and the losers were tiny in comparison to the winners. And that's what you've got to be looking for with your trading. You've got to get the combination of the numbers correct, and you'll only be trading with those sort of, on the short-term time frame charts, you'll only be looking at those sort of numbers when you've been trading a long time like me and you're very definite with your systems. Most people lose money trading, and there's good reason for that, because it's difficult, but it is possible. And if you don't want to give up and you want to make something of this expertise, then give me a shout and I'll let you know if I can help you. My name's Anthony Beardsall. I do hope that you got good things out of this video, and I look forward to seeing you on the next one. Do subscribe or ask any questions using the buttons and form below, and I'll see you on the next video. Thanks for watching, and cheers for now.